go. It's FOMC time, baby. Good afternoon, good evening, possibly good night, ladies and gentlemen. We are back. We are ready. FOMC in 15 minutes coming up. We get to see what the rate decision is going to be today. I've got water now. I've evolved past the Powerade, past the Dr. Pepper. We are at water o'clock. So we got rates coming up. Could be 0.5%, could be 0.75%. Could be a full percent, and for some reason, I think Wells Fargo wants 1.5. If it's 1.5, I mean, good Lord, market's just gonna turn over. Let's start a poll up to see what will rate decision be. 50, 75. 100. Gotta get some music started too.
Moho.
I don't know how to end it, so we're just gonna leave it like that. Get the music rolling. We went to the whole playlist earlier, or we went to the end of the playlist, so I gotta start it over. Do you think Financial Juice is going to be the fastest source to get it? I usually wait on Walter Bloomberg, but Financial Juice seems to be pretty quick. Oh, 60% saying 100. Yeesh. We'll see. See what we got going on. So nobody thinks 150 and nobody thinks 50. So it's about half and half. I personally think it's going to be 75. I think the market's priced in 75. If it's 100, we're going down. If it's a 150, we're going way down. And if for some reason it's 50, we're going to get a crazy squeeze. Because that shows that the Fed's kind of changing their mind, you know? They're moving back in the other direction. Does Powell, does he speak at 2:30? Let's switch over here. Look how bright it is in my room. It's so bright because it's midday. I'm never here. Papa Powell watch party, absolutely. Welcome back, everybody. ACJD, Broda, Gold Miner, Snacks, Walrus, Making Sales, Jordan, AC, I already said you. I think they do 75. They've been doing, you all right. I mean, they've been doing 75, 75, 75, and we've still got inflation higher than expected. So maybe they pull the plug and go to 100, because we will see a nasty knife for 100, unless the market for some reason is expecting this. You know, the market comes out and they for some reason have said the same process that you just said right now, like the market gods, whatever you want to say, has priced in, you know, 100 points, or 1 full point, 1 full percent, sorry. Maybe we won't do a whole lot. Maybe anything under 100 will go up. We'll see. Hey, what's up, Bentley? How's it going? Maybe I need to start streaming it this time more often. We got quite a few people in here already. This is a big event, though. I didn't want to miss it. You know, this is for streaming content, for, you know, stock-related content. This is a time that I need to be here, you know. So, yeah, market does suck. Today had some of the worst price action I'd seen in a month. All of September had been, you know, slower, but nothing crazy, nothing like insanely negative. But then today, the price action was horrendous. It was just so bad. Best potential I had was Mara. I had Mara at like 1027 this morning. It shook me out with the market. Ran all the way to 11 something. Hey, what's up? Everybody having a good day? Yeah. Market wise, I mean, like profit wise, no, not a good day. But overall, yes, I'm having a good day. We took Noah to his 15-month appointment today. Everything's good. He did get 3 shots and he cried. He was a very sad boy, but he got over it. Now he's taking a good nap. And then I went and got a gyro from a local Greek restaurant. It was delicious. So we're good to go. We're good to go. We're ready. I'm gonna pull up the financial juice. Hopefully get the news as quick as possible. And we'll see what happens. I'm less here to take trades and more, you know, just to see the fireworks, you know? Yeah, I know. Glad it's crazy I'm here during the daytime, right? Where did my You made bag today? Nice. Good job. Bottom tick sober. Nice. Yeah, sober was being very strange, but I mean, if you bottom ticked it, that's great. Caught it right around this zone, around underneath $2. When it's low, it's 185. Levels of skew. Does that mean like they're guessing like negative red puts? I'm not entirely, not well versed in the options lingo. So we got 10% guessing the 150, 43% guessing the 100, and 48% at 75. Nobody thinks it's gonna be 50. Difference in IV between at the market and out of the market options. Yeah, I feel you this one. I mean, I'm ready for us to just tear the Band-Aid off. If we're gonna go down, let's freaking go down. If we're gonna, you know, whatever. So anything short of Armageddon, we can go huge. Okay. I don't see Armageddon happening. I really don't. So we're ready for like a squeeze fest. So it's kind of the opposite of these days here, where we just like everybody trips over themselves to sell, you know, and it just keeps piling and piling and piling to where it's a huge sell-off, or maybe the opposite. Imagine if we did get over 400 by the end of the week. That would be wild. If we were to somehow get over 400 by the end of the week, then we're right back in this thing. And then it would almost be like this. These two candles are outliers, and then you've got bottom trend here, here, and here. If this is confirmed. So like right here, that's our bottom trend now. And these two are just kind of outliers of the trend. Which happens a lot on SPY, I feel like. It kind of overreacts and get these outliers. Yeah, that would be nuts. That would be crazy. I mean, we're within range of 388 to 390 right now. We'll see how it plays out, really. But we are within range of a big move. At the same time, in the same breath, I mean, we could just fall right underneath. If we fall underneath 384 and then 382, it's probably 370. Like, there's not much left. Excuse me. So we got about 7 minutes left till the rate decision comes out. So 390 is a big level. 384 to 382, really 382 is a big level. We'll see what happens. Kind of in a lull zone right now. The market is ticking up a little, but it's not really like, it's not high of day. It's not really going nuts, because usually when you see that, when you see this big push up into an event, it's just sell. It'd be crazy. Imagine if we got the 7% halt down today. Where would we have to go to from here? It'd have to be from yesterday's close. So like 385 minus 7%. We'd have to go to 358 today to haul down. That would be just nuts. But yeah, I mean, if we're going to go up, I think this is going to set the tone for the rest of the year. Either this one we start going up, we start trending up again, or we rip the band-aid off, get the selling done in like a week or two, and then start our new journey upwards. Yeah, it wouldn't surprise me if we go, 385, 388, 385, like really quick, huge candles. All right, we got less than 5 minutes remaining. Figure out how to get this on screen as well. Okay, that should work. I may just have to refresh it, but it should show me right here on this news feed everything I'm looking for. Let's see, so the consensus so far is 75. You guys, 46% vote, 142%, and 150, 12%. So nobody's expecting a lower than expected result. What are we gonna get? Market is reacting positively, which kind of scares me a little bit. Either way, I think it's going to open up a lot of volatility, which can be good in the long run.
ICAD.
There's usually some wild reaction, between the rate increase. Yeah, the whole matrix is going to disappear. It's just going to absolutely disappear, one way or the other. Either this whole bid side is going to get completely flushed out, or the whole ask side is going to get flushed out. So market is pushing a little higher here. Let's pull up QQQ as well. I don't even know what Dow is on like ETF wise. Never pull up Dow. All right. I don't want to verify my account. You're lucky I made a count in the first place, financial juice. So I appreciate you guys back here with me. Thanks for the likes. Thanks for showing up. Got big market news coming up within the next minute and a half. We are about to set the tone for the rest of the year, really. This is either big Band-Aid rip-off time to where, you know, we capitulate or however you say it. We roll over, we get our huge selling out of the way, max fear, VIX explodes, yada yada. Or today is the day that we actually start our journey up. What's it gonna be? So it's estimated at 75. That would bring us up to 3.25%. Got about 30 seconds left. I guess I'll do a refresh right at 2 to see what we got. I know, yeah, we need the CNBC markets in turmoil. I will put, so we got two different options here. We got a win moon and we got a this is fine. So whichever reaction we get, I'm gonna put up that logo onto the SPY chart. Here we go, 5 seconds. SPY's reacting positively currently. The refresh did not work. Don't see anything yet. 75 BPS to 3.25 versus 2.5 previous, estimated 3.25%. So we got 75 BPS. I would think that that's priced. So we are getting a sell-off. I feel like that. See, the order book completely disappeared. I really feel like this can get bought up. Let's see, down to 384, 288 on QQQ, 3367. Yeah, the order book's gone. Matrix has disappeared. So it's completely as expected. There should not be a huge negative reaction to this. This is exactly what everyone thought. And we priced that in from 415 up here. It's going to bring it down to 382. We're going to test the bottom end first, looks like. All right, there's the 382 touch. It should bounce from here. It's going to bounce. All right, for immediate reactions only. All right, we're back over 383 now. 383 and a quarter. I'm not playing the volatility right now. All right, 33 and a half, 34. There we go. There's the bounce. Perfect bounce off support. Over 34 now. 34. See what we get here. Is it going to be push back up, or is this a fake bounce? You really don't want to see it start, you know, turning over here, down this far. But we did bounce, you know, 382 to 384 already. 34 and a half down. So big bounce off bottom end support. 383, 382. Fed fund rate forecasted at the end of 2024 to be 3.9%, previous 3.4%. We're already at what, 325? So that's not many increases left throughout the end of 2024, if I'm reading that right. All right, this music does not fit the jam right now. All right, we're fading back down a little bit now. 382.5. Gave a good bounce. Median expectation for the Fed's rate by the end of 2023 is 4.6. So that actually moved up a lot. So they're expecting more higher rate increases throughout the end of the year. So that might be something not so good. So they're expecting another almost full point, over full point. Because we're at 325 now, and they're expecting 4.6 by the end of the year. But that would be starting to slow down into half point increases. Market's not reacting how I thought it would react, that's for sure. Unless this forecast is what the issue is. The forecast is increased. I mean, 3.4% in June, we're already at 325. So. All right, we're at low day now, 381.60. We're starting to fall now. Our lows to hold are 381.20. Let's see, are we gonna, is today the day we turn over even though it's expected? We got exactly what the market expected and we're still turning over. So big negative reaction here. Could we test 380 right now? All right, we're down under the lows here from yesterday. So yesterday's lows broken, almost a 380 touch. Back to 381.5. What does this mean for the daily now? So we touched 380, we're pushing back up a little, 381.5. Not a whole lot of strength though. This is not the best reaction. We have bounced now though from 380 to 382. I'm guessing Bitcoin's rolling over as well. Yeah, Bitcoin was as high, actually went to 20K almost right before this happened. It went as high as 19,950 and knifed from 19,950 to 18,650 in one 5-minute candle. Huge candle for Bitcoin. So everything a little bit worse than expected here on the forward-looking statements, I guess you could say. Futures after FOMC decision implied traders see an 89% chance Fed raises rates another 75 at November meeting. Unanimous favor of the policy. We're ready to change the policy as necessary. According to one Fed official, the United States GDP will contract in 2023. So they're saying all these negative things. I think that's really what's kind of affecting the market. Yeah, they could. They could absolutely. And it wouldn't surprise me one bit if they trapped the bottom here and we pushed. We got the 380 touch. We pushed through lows. You want to see at this point, though, higher lows put in. Whether that's, 5-minute higher lows, 1-minute higher lows. but it's trying to bake in all of this news that's coming out here of a little bit worse forecast than expected. Oh, is that the 420? Yeah, you should be able to set it all the way up to 1440p. 2K. Oh, look at this. Look at this. Yeah, this could be nasty for the shorts. We got a big bounce coming in. 380 to 384 already. So it wanted to push down, test those, those whole number, 380. Got that test in, and now we're all the way up to 384. The room's long? Okay, nice. It was looking tough, but the risk reward, I guess, was okay once we got down to here and pushed. Went as low as 380.21. We'll see how it reacts over the next candle or two. End of 2025, expected 2 point. They're going way, like, why do they even guess what the funds rate is going to be at the end of 2025? Like, what good are they doing? That's like a weatherman trying to tell you what's going to happen in a month. All right, we got about 20 minutes till his speech, but we are, looks like we found a bottom here around 380. If we can push back to highs and through highs, this could get wild on the long side. It's definitely showing strength though. Definitely showing some strength so far. I feel like that nothing that's coming out is really unexpected, really. So you're saying as soon as it retook this 381 and a half, yeah, we're holding mid 382s right here. The selling is definitely slowing. Euro at 2-decade lows, 98 cents. If you're planning a trip to Europe, this is the time to do the conversion. The dollar is worth more than the euro at the moment. All right, we need to put in this higher low now. Whether it be here, whether it be here, we need to put the higher low in. Back under 382 now. See if we hold this low from over here. So 381-ish. I think probably needs to hold. We got back above it. That finally sent out a whole breakdown of the whole thing right here. GDP growth of 0.2% when it was expected at 1.7. It's kind of bad. That's kind of bad. but they're still not expecting a recession.
SNT. Moho.
All right, we're coming back down to test this 381. Let's see if we put it in the high or low. If we start venturing, you know, down this way, if we start H patterning and venturing below 380, we're not going to be looking good at all. Hey, Rachel Ortega, thanks for the sub. Appreciate it. Welcome in. Thanks for hanging out today. Usually doing a morning stream, but today we did a double stream. All right, 381 is testing. It needs to hold this 381 level, I think. It's trying to roughly hold 381. Trying to give it up here. Let's see. See if it holds the body. Feeling a nap soon? Yeah. I'll probably stay on until Powell starts talking. Maybe a little bit through Powell start talking, and then I'm going to roll out.
SOBR.
All right, we're trying our best to hold this bottom end here. Back over 381. Overall, it doesn't look too fantastic right now, though. I don't know if this is a perfect H pattern, but it doesn't look the strongest. I don't blame you. Just enjoy the music. I still think there's a chance of high day if we put a bottom in. I think I can go ahead and pull this away. Sober's going crazy, really? It is. Why did it halt up? What the heck? They think people's gonna be hitting the sauce tonight off of this or something? EBAX did not want to go today. SLNG halted up a couple times, but back under 10. Moho was a push on a D-list bounce. Nothing. Literally nothing happened today. I played sober earlier. I took a loss on it, actually. All right, we're looking not too hot right here. Either it gives another 380 test, pushes hard up, it pushes below and puts in a trap candle, or we really start to roll over right here. Definitely does not look too hot. That 15-minute is really ugly candle. Let me flip over here and see what stocks look like. Apple. Apple's close to low of day. Apple's like just not even moving. What am I looking at? Apple's like completely frozen right here. Oh, that's not Apple. That makes sense. Okay, Apple, yeah. Apple near low of day. Apple at a demand zone, though. So if you look, Apple right here is at this demand zone from this pre-market high and this level right here. We came back down and retested. So, you know, market is Apple. Market is always Apple for whatever reason. Apple is the market. So if Apple starts turning around, if Apple starts showing some strength, then so will the market. They look spot for spot the exact same chart right now. You still holding on to sober, AC, or are you out? All right, it's not giving up without a fight. Apple's still holding lows. Market's still holding 381 level. If they can get this train moving in the other direction, I think they got a shot. I stopped out. Oh, gotcha. Gotcha. I don't blame you. Nick, you're still in? Okay, cool. Sweet. All right, let's see if we're going to push higher here.
SLNG.
Okay, it's open. SOBR is open. Almost to $3. Zach, what do I think it's going to push to? Bulls take over. I think we can push to high of day, really. I think we could push back to 387. Wouldn't surprise me at all. I've seen this happen a lot, but I mean, it's going to take, you know, the train's going to have to start moving. I think the music's just a little bit too loud. I can't hear. But I mean, I've seen it happen plenty of times where we just start getting candles that work our way back up to high of day, and you know, that would over high of day from here would lead to some big action over the rest of the week, I think. But if we start to fail, then not looking too good. Maybe 370 soon.
SGA.
We've tried to push up a couple times too, and it just hasn't worked. This candle pushed up, this candle tried to push up and ended at lows. Volume's kind of fading off too already. Sober over 3? What is going on with that thing? Everybody's trying to catch it for the potential T2 move tomorrow, and for some reason today it halted up. It's ripped. Went from 220 to 320 so far. 160K bid, halting up again. So sober second halt. Is that time of day? I think I talked about this strat. Maybe. Yeah, I'm usually not even around at 230 anymore. The market's been so trash. Oh, they stopped the halt. Didn't halt up. Market's trying its best to curl here. Clearly need above that 384 level. We are putting in slightly higher lows though. Just ever so slightly higher lows. So we're still trying to push highs here. I don't know how much longer I'm going to stay on, really. We're getting kind of a boring reaction. Unless Powell comes on and has a tone that sounds way different than the numbers coming out, either more bullish or more bearish, then this has been a very uneventful drop. We just dropped and chopped.
SOBR.
Okay, so we do have the higher low in. We can hold it. Sober also high day again. What is pushing this? 335. It almost went to $2 though whenever you stopped out, AC. It went as low as 210. I mean, there's no reason you should have held through that, you know? You played it right. All right, this could be the beginning of the push up on the market. We can really get going here. I already have my Dr. Pepper, but cheers to the water. I know, right? All right, 382.5 again. So we held this bottom in, this 381 level. It went to 380.5 actually, but roughly held this 381 level. Now we're starting to walk our way back up. No body has closed over 383 since the first candle. You still on, Broda?
IOR.
Oh, you got 207? So you bought it earlier today, huh?
SOS.
Yeah, you bought it before that dip, so you've been holding for a little while now.
DS.
That's a hell of an average.
SOBR. IRNT plus. SVRE. DTEA.
This is timing out perfect for you know, Powell to come on and say something remotely bullish, remotely positive.
Moho. SOBR.
I got the press conference up. I'm just gonna, I'll pull it over to the screen whenever we get to 2:30. We'll watch it for like 5-10 minutes, and I think I'm gonna call it.
AIMD, CPHC, SOBR, FAME, RLYB.
All right, we're pulling back a little bit into the press conference. So most of you, or the majority of you guys, guessed it right, 75 BPS. what was expected. That's what was priced in, I thought. We're still getting a little bit of negative reaction off of this, but when Powell comes on, when J Powell comes on, there's always a chance that this gets a wild reaction one way or the other. Yeah, sober went nuts, Billy.
Sigh. Fame. URGN, fame.
Some nice chill music before they wreck our souls.
Moho.
Yeah, roller coaster day is right. I didn't even try. Like this morning, I could not get a single freaking green trade going. Here we go.
PTIX. IVAC.
Not even saying anything yet. The market's reacting negatively. Here comes the guy. Oh, nice job, Florida. Congrats. Sounds great.
Moho.
All right, we're starting the H pattern before he even opens his
Good
mouth.
afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal.
TKNO.
We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
Look at this.
In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employment rising by an average of 378,000 jobs per month over the last 3 months.
Climbing too here, guys.
The labor market continues to be out of balance.
Look at this. We're starting to push.
With demand for workers
Strong
substantially
QQQ candle
exceeding
here.
supply
It's
of
actually
available
leading
workers.
the pack.
The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect
34.
supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections.
He's
Over
saying the
next
stuff
3
that
years,
we already
the median
know,
unemployment
but
rate
market's reacting
runs
positive
above
to
the
it
median
right
estimate
now.
of its longer run normal level.
Papa
Inflation
Pal,
remains
baby.
well above our 2% longer run goal.
34,
Over the
34
12
and a half
months
here,
ending
coming
in
up.
July, total PCE prices rose
Coming up on VWAP, though, all these
6.3%.
EMAs.
Excluding the
I
volatile
don't think that
food
really
and
matters
energy
with SPY,
categories,
though.
core PCE prices rose 4.6%. In August, the 12-month change in the consumer price index was 8.3%, and the change in the core CPI was 6.3%.
FSM.
Price pressures remain evident across a broad range of goods and services. Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created
Yeah, the way he's
additional
talking
upward pressure
makes it
on
feel like,
inflation.
everything is okay. Like,
The median
we're
projection
not,
in the SEP for
like, things
total
aren't falling
PCE
apart here.
inflation is 5.4% this year and falls to 2.8% next year, 2.3% in
385.
2024.
All right,
and
we're popping.
2%
If we can
in
get back over this
2025.
level right here, oh my gosh, it's
Participants
about to get
continue to
crazy.
see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term deflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But
QQQ
that
is
is not
almost back.
grounds for complacency. The longer the current bout of
Back over
high
290.
inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
GDXJ.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment.
We're getting
and
close,
stable
guys. We're
prices
getting
for
really
the
close
American
here.
people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing
35
increases
here.
in the target range for the federal funds rate will be appropriate. The pace of those increases will
God, look
continue
at
to
the matrix.
depend on
It's
the
going
incoming
nuts.
data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases
That's what you want to
while
hear.
we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking
Okay,
as
so
clearly
nothing's
as
locked
possible.
in. That's what he's saying.
Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises
All
to
right, we're,
4.6% at
wicking
the
around
end
right
of
here.
next year and declines
In
to
the zone.
2.9% by the end of
We
2025.
can make a candle
Still
that can
above
get
the median
above
estimate of its
87.
longer-run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Hi, Chair Powell. Thank you for taking our questions. Gina Smilik from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done. So the way we're thinking about this
We're working
is,
a lot right here, guys.
the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular: to achieve a period of growth below trend, and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out, but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question.
That's not the best thing you want to hear right there.
We'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%.
So they're going to hold it there
So
for a bit.
that's what we'll be looking
Looks
for.
like it's not going to be a straight up, straight down. But I
in
mean, I
terms
feel like
of,
that's expected too.
Of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider that.
All right, I think I'm done watching this. All right, so we got a straight down move, 75 BPS, 3/4 point increase as expected. Market did hold 380 level, put in a higher low, held 381. Now we're pushing back up towards 385. If we can get back above high of day, I think things can start to push higher. It all depends on, you know, how the reaction, because we're basically in the mid candle right now. We're not at the top, we're not at the bottom, we're in the mid. So whatever happens from this zone is really going to determine what happens not only today, not only the rest of the day, but the rest of the week, I think. So as of now, I'm going to call it. Thanks for joining back in for the second stream of the day. The first time we've ever second streamed. But we'll be back hopefully with better price action, better everything tomorrow morning. So I will see you guys back here tomorrow morning, 8 a.m. Thanks for tuning in again. Thanks for liking again. Thanks for showing up, hanging out. I'll see you guys tomorrow. Peace. Market's trying to break up right now, actually. 386.